नहीं होगी, एक बार नीचे करो एक बार।
All right. Good morning, good afternoon, and good evening to everyone from whichever part of the world you're joining. This is your host, Harsh, again. Warm welcome on behalf of GTCFX. Thank you once again for joining. And before we start, those who are joining in for the first time, let me just remind you that these live sessions, real time live sessions, are done every Friday, 4 p.m. East Dubai time, and it's going to continue across the year. There are 47 sessions left, and let me again remind you it's only one time registration that is required. Once you register, you are already taken in for all remaining sessions. All right, you just need to save the link or joining link, and I always send a reminder a couple of hours before the session. So, once again, thank you for tuning in, and we are also live at this point in time on YouTube. You might want to keep note of that as well. And let's get started. Once again, these are your sessions, so please feel free for having any inputs that you may have, or you have any questions. We don't really prepare anything. Okay, before beginning, general disclaimer: whatever we are going to discuss, or uh, excuse me, if your mic is on, may I just request to switch it off, please? Thank you. Okay, whatever we are going to discuss in the next 45 minutes to 60 minutes, kindly take it as an educational purpose, and nothing should be construed as an encouragement to trade or invest in any form of asset. Kindly look into your personal risk advice or risk management before taking any kind of trading step. Trading CFDs or margin is always carrying a lot of risk, and they should be taking a lot of care and consulting before proceeding. Thank you very much, and let's get started off with the charts now. All right, sir. What is flashing in front of your screens is a daily chart of the Euro USD. What I'm going to propose now is a very high potential trade setups in two instruments, that is the Euro USD and the dollar index, where the trade is almost ready to go. Gold, we are going to take up the third instrument, which is almost completing or near to completing its major wave B of an expanded flat. Dow Jones and SPX we will review, but we were not recommending any trade. We are waiting for a potential reversal or a confirmed reversal on the price action. And VIX we will review again. After that, I will be very happy to take any of the trades or any of the setups that you might like to want me to do so. All right, so let's get started off with the euro, a bigger picture first, and then we'll go back to an hourly. And yeah, it required a 15 minutes chart, but 15 minutes would not be required, sure. Remember, we had done this chart yesterday as well because we are doing theory in Hindi, in English as well. So we just did a Elliott wave theory yesterday in the Hindi educational sessions. And I'm going to quickly run you through the wave counts. Why we are doing it, we have already discussed in the class yesterday. You might want to join the educational series as well. I would be happy to pass on the links at the end of the session, and any form of encouragement to your colleagues would also be highly appreciated. So Euro USD has rallied five waves on the north side. That's an impulse wave, which is being followed by a three-wave corrective drop as well of the similar degree. Please don't worry if you are not used to elite waves or understanding these. What is important is that we are going to come up with a high potential trade setup in the next 5 minutes or so for euro, which will be helpful just in case if you're trading the instrument or advising. So five waves up followed by three waves down is a clear indication of the larger degree trend, which has been on the north side, which has been declared on the north side, and now the retracement is also complete. So the next leg is expected to move in this manner up five waves. According to the theory, now this is what we are expected to see maybe for the next 4 to 12 months time period. All right, keeping the larger picture in mind, let's now go to the hourly chart where we should be able to identify and pick up a high potential trade setup. I'm just trying to zoom in a bit so that the view is clear. All right. A lower degree impulse is in place. So kindly allow me to quickly do the count here. That is a lower degree five wave rally, which is just completed between 13th January and I think last Friday. All right, and what we are seeing on the right hand side is a corrective wave, which is also, it's either complete or it's just about midway. As far as the technical theory is concerned, it's enough for wave C to terminate where it has terminated right now, just around 1.03 5060 range. And I'm sure that those who were there in the class yesterday where we were doing theory and then we touched the Euro USD potential wave count, we were we were right here and we were expecting a rally which came right after the session and a decline to complete the ABC corrective wave. So we did see the rally neatly in the New York Open just after the session yesterday, and almost almost complete or just about near to complete, maybe 20-30 points lower. But you know what? Sometimes when the pressure is too much on the northern side or towards the higher degree trend, the retracements could be shallow. So what we are recommending here is a partial. I'm now wanting to propose a trade, but before that, let's confirm the waves. So we've got a five waves impulse on the higher side, followed by a potential A, B, C, which is either complete or near to completion. Ideally, if prices go and hit the 1.030010 mark, it would be one of the best optimum level to enter on the long side. So is the stop goes right around 1.07, 1.0175. The range to enter, we propose, okay, let's do a trade here where I'm actually typing. The only request is if you are trading, it's okay. Even if you're not trading, kindly make note of that. The potential buy partially, I would like to go right now 1.0375 range, 7577, whichever it is. Only partial right now, and remaining just because in case we don't lose out if bulls are back in control right from this price. Remaining, please have some space for prices to do a bit more correction towards 1.031030 kind of a range, uh, potential stop, exact stop. Always try to be below the noise or away from the noise. 1.01, let's say 50, just below 20 points below the 75 low here. And the targets, I'm typing the targets and then showing why we are doing it. We just calculated, projected yesterday as well. So it's around 750 if I remember correctly. And I do it a number of times every day. The Fibonacci extensions for a potential third wave rally. I'm giving it input here, a hypothetical input. Prices have not yet reached there. Maybe you can go on a 4 hour time frame and you can see that clearly. So the first target is around the 1.618 target comes around 1.09, and so that's the second target. The first is 1.0771. That's precisely just about 20 points what we have proposed, around 1.0750 right now. All right, so that's the first potential, and this is a very high potential trade setup, absolutely in line with the theory. What could happen here is maybe one more slight lower, around 20-30 pips. And one more thing which I'd like to show is if we can flip the chart to a 4 hour, it is just about just shy of testing the backside of this trend line. Now, those who have finished the trading zones in Hindi, in English, we are still to cover that. They would already know what is the backside test of the resistance trend line. It's going to be a supreme support if prices drop there. So quite a few number of factors due to which we are concluding a very high potential trade setup here in the euro. All right, so let's now switch over to the dollar index. Another one, an extremely high potential trade setup. It's been quite a while. The dollar index has been rallying just about September 2024, and most of us are watching dollar index rise for the last 4 months, and it has just recently hit a couple of years high. So it is quite natural to think that the momentum might continue further. It's quite natural and human to think the same way. But charts are telling us a different story here altogether. That's what I'm trying to present. Dollar index, what it has done is five down in an impulse manner. So the larger degree trend in the dollar index is down, which was decided or which was declared by the index itself sometimes in July 2023. It took about 2 years for a corrective wave ABC to materialize. It took a very complex structure, all right, and that corrective wave has just completed a complex 335 structure at a minor degree. Not only that, it has tested the Fibonacci 61.8% retracement as well. All right, so that particular zone, the high probable turning point, which was expected around January 13th, and we've got the turn. We've got not only we've got the turn, but we've also got the first wave lower. So let's have a neat and clear look at the price action or the wave which is constructed on the hourly chart, that is also telling us a wonderful story. The price action or the wave, we normally rely a lot on the waves actually, and then the price action, and then the chart patterns, and then the Fibonacci and the trend lines all mixed together. So the wave is telling us a clear story that we've got five waves down, first of all. And once you have five waves down, it's a clear indication that the larger degree trend is down from here. What we need to wait for is a corrective rally in the opposite side. Now, if you notice the price on the right hand side of where we are working right now, it is almost halfway for a potential ABC corrective wave to complete. Don't worry, please, on the degree at all. It's my duty, it's my job. What we are basically focusing on these sessions is to find high potential trade setups for you, for us actually. So as per the theory, five down followed by three up, and we are almost there. This could happen in the next few hours or so, but it's not necessary. As I said, if the momentum is very strong on the south side, which looks like it is, the retracements could be very shallow. That's why we are proposing a potential short, but partial here and a remaining over there. I'm, I'm placing the trade order with exact prices. The stop loss goes about that high. All right, so let's do a trade stop, entry, stop, and potential target for the dollar index up on your screens now. Potential short entry for the dollar index. Now there is a kind of a natural correlation which traders would like to apply, that if dollar index is going to weaken, the opposites, especially gold, would strengthen, and that's a very common correlation. Let me remind you, please, it's not always that the correlations work. Okay. In the last 4 months, we have seen both dollar index and gold rallying. So each one of the instrument follows their own waves as well. And if you are good at identifying those turns, then I think we should be good to place a trade as well. So it's 108.25 partial. Remaining would suggest don't wait too much, but if 108, 50, 70 kind of a range should be good enough. It could potentially go towards 109 as well, but prices should ideally stay below 110.30. I'm putting it a bit higher than the swing high on my chart. Just a humble reminder, dollar index has many CFD providers have got different price action for the dollar index. So kindly adjust your stop accordingly. And target I need to find out because it's been a while now. So let's go back to the Fibonacci extension. So let's find out the trade. It's a simple extension for the dollar index. And I'll flip the chart on a 4 hour. So it's 104. Let's keep it 104 right now. There are lower targets as well, which can be defined. There are too high for a short to medium term trade setup. So 104 is good enough as a potential target. Here you are. And that's the second trade setup, high potential trade setup for the session for the day. All right. You never know. We don't have the instruments don't have much time for this to happen. Probably early next week or just about in the New York session after we are done. There should be some action of some price action, and it should be watchful actually. Even if you're not trading actively, what we recommend is at least be watchful of what we are recommending here, and that would give us a lot of confidence. All right, let's move on to gold now. And gold is before we come to a shorter time frame, I would like to just appraise of the story, what is going on the daily chart first. Just a humble request, if anyone is facing connectivity issues or connections are being dropped down and you have to reconnect again, and if it is happening more times or more frequently, kindly let me know. I will have to check the issue from the technical department as well. Please pay attention on the waves for gold on the daily chart first, and then we will go back on an hourly. We are going to spend 5 minutes at least on this chart. Quite a number of traders in my region and across the world are very interested in trading gold and finding out what the potential direction could be. So now the high potential or high probable wave count, first we will present that and then we will present the alternate wave count, all right? Wave 1, wave 2, wave 3 was an extension, and here's the sub waves for the extension. Once again, I'm repeating, if you're facing connection dropout issues and you've got to reconnect, kindly let me know so that I can look into the matter. I'm seeing potential connections being dropped. Okay, so that was an extended wave 3. What we are now expecting, according to the wave theory, is a potential wave 4 drop down, and ideally the drop down should be somewhere in the region of the 38.2% of wave 3, which is somewhere close to 2400 2450 zone. And also, if you allow me to do the channeling, the Elliott channel suggests a similar region which should be seeing around the March first week. So that wave 4 can be safely moved around to this area now. All right. Okay, so this is a high probable trade setup which we are proposing right now. Now, before going to the depth of what wave 4 would look like, I just wanted to let you know the prototype of what the wave 4 could look like. This pattern is it's known as an expanded flat. Okay, expanded flat means we've got wave A. Why I'm explaining is because we all know what is happening and why it is happening. That is A, B, and C. I'm going to quickly change the degree to a minute. Now, please pay attention to the pattern here, because this is what exactly there are very mm, uh, much more corrective patterns, and they are much more complex to understand than the impulse waves. Okay, that's why I'm presenting this to you. Now, wave B, in case of an expanded flat, it goes above the high of wave A and then it reverses sharply. Now, this activity mostly is called a bull trap because it's an expanded flat. It goes up and prints a new high, giving us all a feeling that we are heading towards a fresh territory of printing sequence of series of new highs. And suddenly it all reverses from there. And there is a technique to find out where this wave B could go and end, which we are now presenting. Now, there were several possibilities. Just 1 week back, this is 31st of January right now. Between 17th and today, there were several possibilities of this corrective wave. The first possibility was an ABC like this. The second possibility was a triangle. Now, both have been ruled out as high probabilities, and this was the alternate count presented earlier, which is now the preferred count. I repeat, sir, this was an alternate count presented earlier. Now it is turned out to be the preferred count. So, our duty is simply to understand where the price action could go and find strong resistance before it reverses. All right. So for that, let's move into a potential a 4 hour time frame. All right. Now, please pay attention to what we are doing here and what the prototype was explained uh, in the last page on the daily chart. This is the prototype, correct? That we just discussed. If I go back to the prototype once again, it is very important for people like us, technical analysts and chartists, to find out where we are exactly on the theory part. We know the patterns. Okay, we also came to know that the patterns are limited, 13 of them, and we also know that the patterns are repeated over and over and over again. So once we identify the pattern, only thing we need to know is where we are in the pattern. We are here right now. The green box that I've done, we are exactly here right now. All right. Now let's go back. Now this is the real game now. Wave B is almost done, or it can go a bit further. Now the capacity of wave B is the 38.2% of wave A. So if we kind of allow me to do the 38.2% of wave A, it is much higher, which is 2890. All right, but that is not the case always. In fact, it should be like, yeah, it's both cases it is around 2890 something. But so that is the maximum upside which is pointed by the 38.2%, which is the maximum upside. Now, theoretically, what is required for the expanded flat structure to activate is above the high of wave A, which is 2788. There should be one more high. We got that high right now around the 2805. This appraisal was done on 19th of Jan or 29th of Jan. This potential gap, we had shown an arrow on the 29th of Jan, identifying that that could be a wave be higher before the reversal. Now that is almost there. And believe it or not, if you count waves here, there are 5 waves which are completing the last probable 5 waves. Allow me to do the wave counts. I'm not doing the wave counts just for the sake of time, but it is one, two, wave three ended there. sideways wave 4, and that could be the fifth wave. Please pay attention. 1, 2, 3, 4, 5. Wave 3 is extended here. When wave 3 is extended, normally wave 1 and wave 2 are equal in size. It's called the guideline of equality. Now you can see 1 and 5 are almost equal now. So a high potential aggressive trade, if you want to take in gold right now, is on the short side, but it is aggressive. All right, aggressive means it is we got a top, but we still don't have a price reversal confirmation. So two kinds of trades I'm going to propose here. One is an aggressive trade setup. The second one is a conservative trade setup. Conservative trade is where you are not wanting to take much risk. And one more confirmation before proposing the trade setup is this. The RSI is diverging. The previous swing high and the current swing high, the RSI is lower than the previous swing high, whereas the prices are higher than the previous swing high. This is a very classic example of an RSI divergence, and I personally like to go with the RSI, the direction of the RSI, which is on the short side. I think we have an RSI divergence on the hourly chart as well. There you see, I just remove this line. That was the previous high. This is the current high. You see the angle of divergence is so important. That is a new high. Look at the angle here. This guy is lagging way behind. It's a very steep angle. All right. So if I would recommend, if I were to trade right now gold, a high potential aggressive trade is up on your screen now. And then I would present the conservative trade as well. All right. Aggressive is very risky, but then there are risk takers as well. Potential sell just around the corner, 2805 or 10. Recommended stop. I would like to stay away from the noise. So 220, 230, I would still want to be above that, and target, a near-term target, I would say, is 2730. But believe it or not, if what we have done is correct, then it's going to be a massive reversal from here. All right. 2730 is just the first one. We are going 5 waves lower all the way uh, below the termination of A, which is 2586. So that the medium term and long term is below 2586. It could go up to 25 and 2450 as well. And the conservative traders who want further uh, price action confirmation, no trade, remain, wait for a break below that small support 2791. So let's wait for a break below 2790. Okay, let prices pull back after that. So and then sell. Okay, so I'll show you in a picture how it looks like. Don't do anything right now. If you are wanting more price confirmation, you need to wait until prices break below 2790 like that, and then wait for a pullback and sell. So your sell would be around 2800 again, and then you can target 2730. All right. I hope it is becoming clear. You need to wait until a break below 2790, wait for a pullback, and then sell. Your stop loss will be very limited. If let's say if prices are making a new high around 2810 right now, then you can place your stop right above that, 1 point above that. So if it is 28.10, just put it 28.12 or 13 and you are good to go, because you are doing it after a potential price action confirmation. All right. So these two are the potential trade setup for gold. And believe it or not, there is a high level of bearish divergence on the daily chart as well. You can see there. There's a fifth wave rally, and there is no new high. So there is divergence being shown here as well. 1 hour confirms divergence, 4 hour confirms divergence, and also the daily chart. All right. So that is the story in gold. If you do have any questions you might want to ask, then please do so right now, or you may ask later on. But I'm going to bring up another story for these are not trade recommendations though, but just a quick view on what the stock markets are doing and what the global stock markets are expected to do in the next few weeks or months. All right. The Dow Jones, the major global index, the Dow is almost completing 5 waves at a higher degree here. Now the fifth wave was extended. Wave four was almost a flat. Sorry, the wave four has to be here. And the reason why I'm saying 5 waves complete here is there are 5 waves complete between the fifth wave as well. You've got wave one, wave two, wave three, potential wave four here, and the fifth wave is getting completed there. So the fifth wave is also subdivided into 5 waves here. But we are still not recommending any trade setups, any aggressive trades at all. We would like to wait and watch for a price confirmation. The price confirmation would be coming with a massive reversal, which SPX has already started possibly. But we need to see a reversal back from this right hand side, at least 60% of this rally or 70% of this rally. And if you want more confirmation, please allow a supreme reversal. Please allow the price action to reverse straight from here and at least break that support around 43,789, and on a pullback should be planning to re-enter on the short side. This is what is expected thereafter. All right, but that's just the beginning. That's what is proposed by the wave structure right now. But we are not recommending any short trades. We're just watching, and we are meeting twice a week for the Hindi live session and the English live session. So we'll bring up the Dow Jones and SPX stories each session. And one last chart which I want to review before bringing it a pause today is the VIX. And I've prepared the counts for the VIX. The VIX is an inversely proportional chart. So if the stock market is rallying, VIX is dropping, and if the stock market is dropping, the VIX should be rallying. Now VIX is showing a triangle complete. I'm going to remove this. Wave 1 at a minute degree and wave 2 at a minute degree is almost complete. You may want to keep a watch that this price is nowhere near to lows. In fact, yesterday also we saw, day before yesterday also we saw, VIX has not made a new low after July 2024. So there has been no new lows in the VIX. It is preparing itself to rally further, which is a great indicator to understand what the stock markets could be doing going forward. So we are not recommending there, but keep a watch that the stock markets are preparing for a big reversal, which might be which might be at a very high degree. All right. So three major trade setups for euro, dollar index, and gold, which has very high potential, and two proposals. We are watching for Dow Jones and the SPX 500. Now, if you please have any questions or any chart that you want to review or want me to discuss, please let me know. If you have any questions, kindly let me know as well. Mr. Ishwar, if you have any questions, you can let me know. You can open your mic as well and speak. Ravi, Shrishti, Shuklaji, Clarence. Uh, so is there a correlation that you're trying to say if the stock market is reversing? What about gold? Huh. Okay, let me try and address this. Okay, I got it, Mr. Ishwar. Your point. We will stay in touch. You can send me an email whenever you're in doubt. We'll stay in touch over there anytime. To answer your question, Shuklaji, not always the correlations work because I can show you two instances where the dollar index and gold has gone in the same direction for almost 4 months. Okay, let me bring up gold. The correlation exists, but it is not only on the correlation that we should place our ideas or trades. Now, if you look at last 4 months, July and September, August. So August 24. August 24, gold was trading around 2380, and after that it rallied all about 2788. Yes, Mr. Ishwar, that's what I'm saying. From August 2024, gold has rallied from 2300 to 2800 almost. Right now we are 28. During the same period, if you observe the dollar index also rallied. Let me bring up the chart so that let me remove this stuff. You see that September 2024, dollar index also rallies from 9900 levels to almost 110, which is a 10% appraisal. So gold has also risen 7, 8% or 10%, and the dollar index has also risen. These two gentlemen are absolutely opposite to each other. All right. Even the stock markets rallied during the same period. So there is no such thing as correlation which is working right now. The best strategy to do in such a situation is to review the chart individually. I can give you a very simple example. Every individual of us, we all have our own birth chart, correct? Like what we call kundli. Now, even if our names are same, let's say if I am Harsh and you are also Harsh, but that doesn't mean that our days will be equal. So we work according to our birth charts. Exactly. Similarly, we should go with the birth charts. We have a question. Yes, sir. Lucino, you're very right. Gold can have a correction from around 28. In fact, we are proposing a range of 28.10, 28.20, and that's why we have proposed a stop of around 28.45 for those who want to trade aggressive in gold. But I would recommend to stay conservative. Let the resistance be taken whichever level, 28.10 or 28.15, and let a reversal come to 27.90. Once it breaks 27.90, it would be a price action confirmation that a top is in place for gold. And once a top is in place, it would be good to sell on rallies. Hope I answered your question, brother Lucino. Yeah, no problems. You can call me Harsh, no problems at all. So this is what I'll remove it first, and maybe you can do it on an hourly chart. So let it rally. Let's say as per our friends' suggestion, and also as per the price action, let it rally to, let's say, 28.10 or 28.20, whatever, and then let it reverse 27 and break 27.90. Now this break means the charts are telling us a clear story that the top is in place. So it is safe to sell on rallies. When it reverses, sell somewhere around the 28. I think you'll get an opportunity again about 2800 to sell. That would be a great sell, and with a good risk reward ratio. Rather than selling aggressively, I would suggest personally to do something like this. All right, sir. Any other question that I may take from your side? Abhishek, Mr. Rafiq, Mohammad Ji, I hope you're all here, and Mr. Pintu Bhai, Ravi, Srishti, any other questions from your side? Okay, Abhishek is showing a thumbs up saying I'm good with the session. So with that note, the grace of God, we can bring this current session to a pause. And once again, I thank you everyone, but don't leave it just now, just a second before you leave. I want to give you two things, please. One is please kindly note down my email address. You may want to reach me for anything that you may need or any questions. I would be happy to get back in less than 24 hours. Please also note this link for all the previous recordings. We have simplified and uploaded all the videos in one YouTube playlist. So you can find all recordings there. As we do all sessions, the recordings will be updated. And I humbly invite each one of you to go ahead and register for other three sessions as well. We are doing English education. We have six sessions left there. We are doing Hindi educations. Elliot Way has started there. We are doing live sessions in Hindi as well. So if there's a language problem, you might not want to register for live sessions Hindi, but education, if you want to register, please do so. And also encourage others to join. That's the humble request from my side. All right. So once again, thank you everyone for tuning in, and I look forward to see you on the other side of the session as well when we come back on Tuesday. Tuesday will be the English education, where we will be starting out with the Fibonacci series. Once again, thank you everyone. Take care and have a blessed weekend. Goodbye. Thanks a lot, Lucino. Thank you very much. Thank you, Ravi, as always, brother. Thank you, Shuklaji. Thank you, Shrishti. Thank you, Malikji. Mohammadji, thank you as well. Pintuji, thank you. All right, Mohammadji, thank you. Look forward to see you guys again. Thank you again. All right, sir. I'm ending the session for today, and we'll be back again on Monday.